If you think silver is about to disappear because everyone is suddenly panic buying coins and bars, you're looking in completely the wrong direction. There's no retail frenzy, no secret conspiracy by hedge funds to corner the market. Yet, the data suggests that by 2026, we could be facing a very real silver shortage. The reason has almost nothing to do with finance and everything to do with technology, clean energy, and the future of the American economy. Most people see silver as gold's less expensive cousin. They think of jewelry, silverware, and maybe some coins stashed away for a rainy day. But in our modern economy, that's not silver's primary role anymore. Silver isn't just a store of value. It's a critical, irreplaceable, industrial metal. Where is it being used? It's in the smartphone you're holding. It's in the electric vehicles you see on the road. It's a key component in every solar panel, soaking up the sun. It's inside the data centers that power the internet and the cloud. It's in the advanced hardware that makes artificial intelligence possible, and it's essential for military and aerospace systems. The simple truth is, the more technologically advanced an economy becomes, the more silver it quietly consumes. Right now, the United States is laser-focused on three massive society-altering priorities. First, achieving dominance in artificial intelligence. Second, leading the global transition to clean energy. And third, reindustrializing at home, bringing critical manufacturing back to American shores. On the surface, this is a powerful, forward-looking strategy. But here's the problem: hiding in plain sight. Every single one of these goals is intensely silver-dependent. Let's break it down. Every solar panel installed uses silver paste to conduct electricity. It's the most efficient material for the job. Every electric vehicle uses 2 to 3 times more silver than a traditional gasoline car, thanks to its complex electronics and electrical contacts. And every AI data center, the massive digital brains of the new economy, relies on countless silver-based components for reliable, high-speed conductivity. Right now, the US is on a mission to build thousands of these new data centers to power the AI revolution. All of this silver isn't being put into a vault. It's not being saved. It's being consumed, locked away inside products, and in most cases, it's gone for good. Now here's the part that most people, even many investors, completely miss. Over 70% of the world's silver isn't mined on purpose. It doesn't come from dedicated silver mines. It's a byproduct of mining for other metals, primarily copper, zinc, and lead. Think about what that means. The supply of silver isn't elastic. It doesn't just increase because the demand for silver goes up. To get significantly more silver, miners would have to dig up vastly more copper or zinc though. But the markets for those metals operate on their own logic, their own supply and demand cycles. They don't just scale up because the tech industry needs more silver. In other words, silver supply is structurally rigid. Demand can surge, but supply simply cannot respond quickly. Let's compare this to gold. When the price of gold goes up, a lot of old jewelry and coins come back into the market to be melted down and recycled. Gold is recycled very efficiently. Silver is not. Why? Because most industrial silver is used in microscopic, almost untraceable amounts. It's a tiny layer inside a computer chip, a thin contact inside a complex circuit, or a fine powder mixed into a paste. Trying to recover these tiny quantities of silver from millions of discarded devices often costs more than the silver itself is worth. So, once industrial silver is used, it effectively disappears from the available market supply. This isn't a cycle of use and reuse. It's a one-way drain. Now, let's look at America's strategic goals again. The US wants supply chain independence. It wants less reliance on foreign nations, especially China. It wants to be the global leader in clean energy and the undisputed champion of AI. These are logical, ambitious goals for a superpower, but the material reality is creating a huge bottleneck. The United States has very limited domestic silver production. Building a new mine is an incredibly long and expensive process, often taking 10 to 15 years from discovery to first production. And that's before you even factor in the strict environmental regulations that can restrict or halt expansion. So, America is trying to scale its most advanced industries at a pace that its raw material base simply cannot support. We believe 2026 is a critical year. It's not an exact date, but it's a point on the horizon where several powerful trends are set to collide. The new wave of EV gigafactories will be reaching their full production capacity. The massive solar installation boom of the last few years will see those panels aging, requiring maintenance and replacement, which means more silver. And most importantly, the demand for AI infrastructure, for all those new data centers, is projected to explode exponentially. This isn't just steady growth. It's a convergence of demand from multiple, massive industries all hitting at the same time. And as we've discussed, the supply side has no quick answer. It doesn't have time to catch up. This isn't about a financial crisis or a speculative bubble. It's about a looming physical constraint on our economic ambitions. And here is what might be the most dangerous part of this entire situation. Right now, the price of silver is still largely dictated by old world thinking. It's driven by investor sentiment, its daily price movements are tied to gold, and it's influenced by short-term speculation in the futures market. The price does not yet fully reflect silver's new role as a non-negotiable, strategic input for the industries of the future. History shows us that when a market finally wakes up to a structural shortage of a critical commodity, the repricing isn't slow and gentle. It's fast, and it can be violent. We've seen it in other materials before. The market ignores the fundamentals for years, and then, suddenly, it's all that matters. So, to circle back to the beginning, silver is undisappearing because your neighbor is hoarding coins in his basement. It's disappearing because the entire engine of the modern US economy is consuming it at an accelerating rate to build the future and maintain its technological edge. The real question we should be asking isn't, will the price of silver rise? A much more profound question is this: what happens when a high-tech economy, an entire nation, runs short of one of its most essential and irreplaceable materials? The answer to that question could define the next decade. Thanks for watching. If you found this analysis valuable, be sure to subscribe for more deep dives into the forces shaping our world. See you next time.